Welcome back to Insightful Value, where we dive into undervalued companies and explore what's really happening behind the numbers. Today, we're looking at Gladstone Commercial, a stock that has been trading at relatively low levels, and the big question is whether there's a real opportunity here or just a value trap. This review is for informational and educational purposes only. It is not financial advice. Make sure to subscribe to the channel, hit the like button, and leave your thoughts in the comments. Gladstone Commercial is a real estate investment trust based in the United States, focusing on owning and leasing office and industrial properties across the country. They generate revenue by collecting rental income from long-term tenants, and their strategy is to deliver consistent cash flow through a diversified portfolio. For conservative investors, the attraction is often their dividend policy, which historically has been very shareholder-friendly. But at the same time, there are clear risks. From a value perspective, the company offers a mix of pros and cons. On the positive side, Gladstone has built a relatively stable portfolio of tenants and properties, aiming for steady rental income. Dividends have traditionally been a big part of the story, though in recent years, growth has been flat, and management had to make adjustments in the face of higher interest rates and financing costs. Margins have come under pressure because property expenses and debt servicing eat into profits, leaving less cushion for growth or unexpected challenges. In terms of recent performance, the company has reported revenue that is fairly stable, but earnings have been weaker than expected. Rising interest rates have increased their borrowing costs, and this is a big deal for real estate trusts that rely heavily on debt to finance properties. As a result, their net income margins are tight, and that has weighed on investor confidence. The stock is down because the market is worried about the sustainability of dividends, limited growth prospects, and how well the company can adapt in an environment of higher rates and uncertain demand for office space. Why consider investing? Well, the stock is trading at a discount compared to historical levels, and the dividend yield is attractive if you believe management can sustain payments. For investors looking for consistent cash flow and exposure to commercial real estate, Gladstone might look appealing. Why avoid investing right now? There are structural risks tied to the office property sector, with hybrid work trends reducing demand, plus higher refinancing costs that could squeeze profitability further. Until margins improve or growth opportunities are clearer, the stock may remain under pressure. Dividends are central to the Gladstone story. Over the past years, payouts have been steady, but they have not grown significantly. The company is paying out a large portion of its cash flow to investors, which limits reinvestment in growth. Any deterioration in cash generation could threaten the stability of the dividend, and that is one of the key risks. So why exactly is the stock down now in 2025? In short, it's the combination of higher borrowing costs, ongoing pressure on office properties, and cautious forward guidance from management. The chances of a recovery in the near term depend heavily on interest rate trends and whether demand for commercial real estate stabilizes. If borrowing costs ease and tenants remain stable, the market could revalue the stock upward, but until then, uncertainty lingers. By the way, if you'd like us to create a review of a company of your choice, we charge only $20 per review. Just contact us at info@insightfulvalue.com. At Insightful Value, we provide in-depth analysis of undervalued companies, breaking down the key data without the jargon. Whether you're experienced or just starting, our goal is to make financial insights simple and actionable. For more details on Gladstone Commercial and other companies, visit InsightfulValue.com. Don't forget to subscribe to our channel, like the video, and share your thoughts below. And of course, check out our website at InsightfulValue.com for deeper analysis.